Hey, thank you guys all for tuning in. This is Mike Denuzzo.
And Matt Gray.
And if you're just now tuning in, we're going to be talking about, what are we talking about, Matt? Fill these guys in.
Today we're going to be covering Ciba's acquisition of Allied Colloids.
And this is Smooth 139. So, Matt, what our listeners really want to know here is, what really caused Allied Colloids to become a takeover target at 98?
Well, they were pretty highly criticized for their poor share and investment performance. Their share prices hadn't risen along with the growth that they had seen, but they also had slow response to currency fluctuations, and the rising cost of materials had really kind of crippled the business, and they weren't really addressing those issues.
Well, despite those problems, they were interested in that water treatment business, is what I've been hearing lately.
Well, yeah, Ciba really was interested in the water treatment business, and so that actually made Allied Colloids a pretty viable candidate for them to take over. So they had a strong balance sheet, and they were able to do so. So they were ready to pull the trigger when the opportunity arose.
As far as distribution channels, with Allied's products, was Ciba able to basically adjust to, where Allied's products needed to be under Ciba?
Well, Ciba was operating in 117 different countries, and so Allied Colloids was much smaller, and this really gave Allied Colloids an opportunity to expand their market, and Ciba could kind of facilitate that for them.
I see. So did Allied's products kind of match up with Ciba's? I mean, I know they're in the same business, but did they have a lot of overlap between their products, or what exactly about Allied did Ciba really like?
Well, Ciba was really interested in the fact that they had almost zero overlap between their products and services. Many analysts saw this as a negative because they weren't sure how they'd be able to synergize the two companies, get them together. But Ciba saw it as a benefit because they'd be able to really expand the business of Allied Colloids. So, Mike, one of the main controversies about this whole acquisition was that a lot of analysts were saying that Ciba really overpaid for the true value of Allied Colloids. It could have been due to the bidding war between them and Hercules, but as an industry outsider, you don't have the exact expertise as people on the inside. I wanted to kind of get your perspective on the whole situation.
Well, what I know is they paid $3.6 billion, which is about 205 pence per share, when at the time analysts were valuing it at about 160 to 180 pence per share. So they obviously overpaid for Allied Colloids. But the thing is, it almost turned into an emotional attachment there because they really wanted Allied. They really saw the potential in the new water treatment division from what I see, and I know that Allied had the higher margins, and they just thought it would be a good integration between the two companies. Plus the whole, the synergy would eliminate about over 1,000 employees. So, Ciba obviously saw some value in there, that they thought it was worth 205 pence per share. So, Matt, as far as Ciba's balance sheet and performance after the acquisition, how exactly did it affect those two elements of their business?
Well, the first thing you really notice on the balance sheet is the huge rise in goodwill. They paid about 2.2 billion Swiss francs in goodwill.
Well, of course, but, that's a write-off through amortization, right?
Yeah, but, they could go up to 40 years with the amortization period, but it's still, the amortized values don't really offset the negative effects of having 2.2 billion Swiss francs of goodwill sitting on your balance sheet. So
I see. Good point.
It was a pretty negative thing to have on there. But what they were really hoping was that the higher margins from Allied Colloids would kind of pay off in that respect. And they also paid a little bit over 1 billion Swiss francs for the in-process R&D. They were hoping a lot of those projects would be able to turn into revenue-generating products and services, but ending up, they didn't really turn out as much as Ciba had hoped.
So all this extra money that they paid for Allied, I mean, how did they finance this whole acquisition?
They primarily used debt, almost entirely debt actually, but while that may seem like a negative, again, Ciba was looking for a way to actually optimize their debt-to-equity ratio, and by financing this primarily through debt, they were able to restructure their leverage and got to a point where they wanted to be at.
Okay.
But, at the end of the day, they really struggled to raise the bottom line, and the goodwill on the balance sheet really hurt the firm.
Okay.
So, Mike, at the end of the day, in acquisition situations, there generally turns out to be a loser and a winner. Someone gets the better end of the deal. But in this situation, there were actually three primary players, and people often forget about one of the main players, Hercules, from the U.S. Hercules was the first one to go after Allied Colloids after their merger had disintegrated, so Hercules was a significant player. So Hercules ended up being a loser in the whole deal because they had two failed acquisitions in 1997, one of which they actually lost to Allied Colloids. Every time they had a failed acquisition, their credit rating had dropped, and they were kind of trying to get Allied Colloids to save their reputation, to redeem their credit rating, and to expand their business and future growth prospects. But because they had failed again for their third acquisition in 18 months, they finally came out as a loser in the whole situation. Ciba looked to be the potential winner in the whole thing, especially after they had successfully acquired Allied Colloids. But they bought the high-growth company with decent margins in Allied Colloids, and they had the distribution channels to foster more growth in an already, significant growth company. But their overpayment led to their demise. They would have won if they could have gotten the company for a lower price, but the bid war from Hercules really kind of put them in a position where they ended up being a loser.
And the other losers, too, I see, Matt, is just the specialty chemicals industry as a whole, because Ciba kind of set the bar high as far as mergers and acquisitions in this industry, because, now these companies looking to acquire another company are probably going to feel that they have to pay a higher price because just how Ciba went through with the whole deal. So in the end, it kind of seems as Alloyd came out as the unexpected winner, just because the shareholders got paid well over what it was worth, the share prices, and for a little while there, Alloyd was in a lot of turmoil. I mean, they had Hercules coming in, and they were going to be taken over quite hostile, and I don't know. I mean, the firm essentially seemed like it stayed intact for a few years after the acquisition. They kind of just branched into a huge, a big water division. So, looking back now, how did the whole acquisition work out for Ciba?
Ciba, right after the acquisition, they really struggled to reach that optimal performance they were looking for. So they kind of rode it out for a few years, and then in 2004 they purchased Razio Chemicals, which is another paper chemicals company, in hopes of kind of rebounding that, and consolidating would help lower costs, and they'd be able to raise the bottom line in that aspect. But again, they're still hurting from their first acquisition of Allied Colloids. It really weighed down the firm and their bottom line. And then moving on into 2000, the later 2000s, energy costs were rising pretty significantly, and so because Ciba wasn't able to really cope with the high energy and material costs, their margins had gotten pretty small compared to the rest of the industry, and this made them a perfect takeover target. And then in the end of 2008, beginning in 2009, BASF purchased Ciba for $3 billion to expand their chemicals division. BASF was a much bigger chemicals firm based out of Germany, and the whole chemicals industry kind of had to start consolidating to cover those high energy and material costs. So Ciba ended up becoming a part of that firm.
Awesome. Well, thank you, Matt, for kind of just giving me and the listeners just the whole the whole picture of this whole deal, and we appreciate you having you here, and it's been fun. And thank you all the listeners out there for tuning in to Smooth 139.